Welcome to the London Property Podcast, your go-to source for navigating the complex and ever-changing London real estate market. Our digital marketplace provides informative and educational content from industry leaders through podcasts and videos. We cover various aspects of the real estate experience, including buying and selling, finance, law, tax, construction, design, and more. Join us as we delve into the latest trends and developments in the market and gain valuable insights from our panel of experts.
Hello and welcome to London Property, the home of super prime. I am your host Farnaz Fazaipour, and we're delighted to welcome back to the show Marcus Dixon of JLL and Tom Bill of Knight Frank, both of you sitting at the head of residential research for both your firms. Welcome back to the show.
Thank you.
Thank you. Good to be back.
So I'm going to start, Marcus, with you, and I'm going to give you the same question. But what would you say is happening right now in the market?
I think that there's a bit of a pause, I would say. Across the wider UK market, prices pretty much flat. We're seeing a little bit of an increase in activity, but the higher mortgage rates are holding the market back. In prime central London, which historically is less debt reliant, we maybe would have expected a bit more activity, but I think we're seeing sort of discretionary purchases, which make up a high proportion of the market, holding back to see what happens with the election, which means that whilst there's quite a lot of properties on the market, there's quite a lot of people looking. We're not necessarily seeing that translate into sort of offers and activity. Certainly not right now. And
Tom?
I think at the moment, as Marcus said, I think the wider UK picture is certainly one of more stock that's come through, but buyers are hesitating. It seems every bit of economic news seems to push the first rate cut since March 2020 further and further into the distance. Mortgage rates aren't doing very much, and the fate of the property market is quite closely tied, I would say, to mortgage rates. It's more about affordability, I suppose, across mainstream markets. But if you're looking at prime markets across London, it's more about the sentiment. And I think the fact that at the moment the first rate cut is moving further and further away, and we have an election, and given where mortgage rates are, if you need to move, you are sort of planning to do so. But if you don't, you're holding back.
Okay, and I know that your predictions are kind of neck to neck, as it were. But if you were to say, Marcus, what is the data predicting over the next 12 to 24 months for prime central London? What is it?
We're expecting that prices will be pretty much flat over the course of 2024. So we've got a 0% forecast, which is effectively a price fall if we factor in inflation. But we then expect prices to start to increase through 2025 as those lower rates start to feed into the market. A bit more certainty comes through, hopefully, post-election on what the new government potentially will do and what the implications of that will be. And then we're expecting that prime central London outperforms in the latter part of our 5-year forecast period. Prices haven't really moved that much, certainly in the last 10 years or so across prime central London. So we think whilst there's a bit more certainty, we'll see those buyers come back, and that will lead to an increase in prices.
Yeah, I was going to say, being flat markets becoming the new norm, isn't it? We've definitely had it for the past 10 years. And Tom, what would you add to that?
Yes, we've been saying that prime central London prices are overdue a period in price inflation for a long time now, but it hasn't seemed to have materialised for various reasons. And I think at the moment, the chief reason is the sort of uncertainty politically. The biggest risk at the moment probably facing the market is what's not in the Labour manifesto. What is in the manifesto looks relatively benign. But once we get that first budget towards the end of the year, I think we'll have a much better indication of where the new government, as is likely to be, where they're going to go in terms of the taxes they're going to raise. They've ruled out a wealth tax, but that doesn't mean they're not going to be taxing wealth. And so I think once we have more clarity from the new government, we'll have a much better idea. But broadly speaking, at the moment, we're down 1% this year, given the uncertainty, and pretty flat over the following year.
With regards to, the sort of politics that's hanging over us at the moment, and the things that the various politicians are saying they're going to do, is your data showing an exodus of wealth leaving? What do you think is going to replace the sort of non-dom chatter that's going on in the marketplace?
There's not an exodus of wealth, but people are looking at their options, and some are leaving. Places like Italy, which has a more favourable regime. The Labour manifesto came out last week, and it wasn't entirely clear what they would do. There's wiggle room there, which could mean that there is a more generous regime than Jeremy Hunt was proposing. 4 years could become 5 or 6. It could be less. We don't know. It's a big question mark. That's the problem. The question of how it deals with inheritance tax on non-UK trusts is going to be a big thing for people to watch. And again, it wasn't particularly clear how they were going to go ahead with that, whether they were going to go ahead and everything. They would be coming in and looking at grandfathering, and so trusts set up in the past were going to be exempt from IHT. So there are all sorts of questions around the edges that are going to have a big impact. But the fact that they're having these conversations and they're looking to change the regime has already meant some people who are perhaps on the fence, perhaps don't have kids in school here, are looking around at their options, and some are leaving.
Probably just speeding up what they were going to do anyway.
Quite possibly.
And how about you? What are you seeing?
Yeah, I mean, I think similar to Tom in that, we I guess we've had similar discussions for quite some time about landlords in the rental market, and are we seeing a mass exodus of landlords with less favourable tax regimes, challenges over cost of debt? And the answer is probably similar to the sort of the answers we're giving around non-doms, is that we haven't necessarily seen sort of a mass exodus. There are some people leaving. There are some landlords exiting the market. There are some people reconsidering their options because of uncertainty over sort of rules over how wealth will be taxed and tracked in the future. But I think probably the other challenge around that is that we're not necessarily seeing the level of new entrants to the market that we maybe would have expected. There's always a natural churn in whatever market in terms of landlords exiting, selling off properties within their portfolio. The difference sort of historically is we've always seen a new group of investors coming in. And at the moment, we're not seeing that to such an extent. We're seeing those people holding back until they have a bit more clarity. And so, which feeds into some of the challenges we're seeing around stock in the rental market. So I think it's just that for the mainstream market, there's not as much of an impact around an election. You can pore over the data, but actually there's nothing that really ties that sort of election run up to a real drop off in activity or prices. But for prime central London, it's slightly different, particularly if you look at the sort of 2019 election when, there were concerns over wealth tax, which meant that the market was pretty slow, probably in the 6 to 9 months in the run up. We're not necessarily seeing that this time round, but I think there will be more people waiting in the prime market to see what happens than there will be in the mainstream market.
Which actually was going to be my next question, was going to ask you about the rental market. So you did touch on that you're not seeing lots of people leaving necessarily the rental market and them being replaced. But it is having an impact on availability in prime central areas, because some of the outer zones were kind of getting stock from the build to rent developers and investors. So if you were to predict what are we going to do for the stock that we're losing in prime central London, where would you see that could potentially be coming from? Or do you think that that's going to just change to first-time buyers or people moving on to buying property?
I mean, I think that the challenge for prime central London in terms of stock is that there just aren't really those big sites that we can deliver sort of significant residential development. Certainly if you're talking about Zone 1 and even now going into sort of the inner parts of Zone 2. So whereas you've got these bigger build-to-rent schemes further out in London, actually the opportunity to develop those within central London is pretty limited. And actually, if you look at the starts numbers that are coming out across central London, we're looking at starts sort of about 40% down on where they are over the long run average. So less starting, partly to do with the fact that central London is pretty full. Obviously, the slight sort of difference there is maybe if we start to see more sort of office to residential or office to living conversion coming through. But again, actually, the office market in sort of central London is pretty buoyant. So actually, they are these particularly Grade A office space is letting pretty well. So that's probably not the sort of stock generally that we'll see shifting across. So I think that if we're looking at supply across central London, it's likely to remain pretty limited, which is one of the reasons why we're a bit more optimistic in terms of rental growth for central London than we are for some other markets.
And how about at night, Frank? What are you guys seeing there?
I think we're seeing a bit more stock actually, probably above £1,000 a week coming through. I think you're looking at a discretionary set of owners who are probably taking one look at the sales market and thinking, well, I'm going to sit it out for a couple of years. So we have seen more stock come through, and it has been a notable pickup versus, say, sub £1,000 a week. And that's had an impact on rental values. Things aren't, asking rents aren't all being hit unquestioningly in the way that they were. So some of the heat, I think, has come out of the market. Some stock has come across. And it will probably depend what happens in the future on, again, what the new government does. If we suddenly see capital rates of capital gains tax aligned with income tax, then you might see a wave of landlords deciding to sell up, and you'll have a lot of stock coming onto the market potentially. So I think, what happens around the first Labour budget again is going to be probably quite telling and set the scene for the next couple of years.
Do you think we're going to start seeing the rental demand moving outside PCL because people can work from home and use transport to come in when they need to, so that pressure on prime central London rentals might actually, for some locals, move out a bit?
Yeah, potentially. I think it happened a bit, obviously, during lockdowns. Yes, I think there will be a bit of people will be a bit more agnostic about where they are, and that's already had a bit of an impact. Conversely, I suppose the central London pied-à-terre has kind of come back in some ways, with people living further out as their main base, and so it'll all balance up. But at the moment, I think what we're seeing is more stock definitely coming through at the higher end, but it feels like we're just in a bit of a limbo, really, and it could go in one of many directions because there's so much uncertainty at the moment.
And I think we're certainly seeing that as well. And I think some of it is a bit of a normalisation within the market. I think we often forget that actually central London was one of the only markets really that saw a significant drop in achieved rents over the early part of the pandemic. And so some of the outperformance in London since then has been recovery. So it's not all growth. Some of it is recovery. But we're definitely seeing a bit of normalisation in the market. I mean, the overseas student market has been really strong. And we saw a lot of overseas students delay their places at UK universities. So if we look at the number coming across in sort of 22, 23, you had that sort of the pent-up demand from those years when they couldn't travel to the UK, as well as the normal flow of overseas students. So that obviously added to demand for those types of properties. We've started to see that normalise now. And we're seeing a bit more movement within the rental market. We were seeing, when it was really competitive, the number of movers compared with the number of people renewing, we were probably at about 50-50, whereas we've started to see that drop back. We were pre-pandemic about 25% renewal, 75% new lets. We're probably at somewhere sort of 35% renewal now. So it's starting to come back to that sort of that normal level that we were seeing. So there's a little bit of that going on across central London.
Is there any particular trend that you're seeing in the residential market UK-wide that we haven't really discussed, but you feel like, investment there in this area or in that type seems to be where people are paying attention?
I mean, I guess the only one, I don't know if it's that relevant to prime central London, but the first time buyer market is arguably a bit more buoyant than we thought it was going to be. But I think part of that is because it's so tricky to get onto the rental market in a lot of locations. So, banks and mum and dad has been tapped up. But I don't think that's really a prime central London story. And volumes are still down. It's just they're not down possibly quite as much as we thought they'd be with sort of the end of Help to Buy. But other than that, it's sort of the mood music is created, I think, by what's happening
in the economy, and you might not necessarily expect that when half of transactions are done in cash, and the mortgage market shouldn't necessarily have such a big impact. As I say, it's not so much necessarily on affordability, it's just the general sense of the first rate cut, in 4 or 5 years. People are waiting for that to happen. Leverage buyers, I think, still set the tempo probably in the market. And so it just feels as though the two things are very closely aligned at the moment. What's happening to rates and what's happening across all markets, including at the prime end. And so spring it's been okay, but it's been slower than it's been much slower than we anticipated back in January when we were looking at 5 rate cuts. And autumn, I think, is the one probably now to look forward to. We might have 1 rate cut behind us. We'll have a new government, but by the start of the autumn, we won't really know perhaps what they're going to do. There might be all sorts of stories swirling around about what they might or might not do. So the political uncertainty isn't necessarily going to go away. We'll have probably a government with a stable majority, but we won't perhaps have more clarity about what they're going to do. So it's all these sort of hurdles, I think, that we're going to have to get over for the rest of the year. That might mean, things don't properly take off in the way that I think everyone's hoping that they will.
Well, it certainly feels on the ground that there is a lot more activity. I think people are sort of thinking, you know what, I can't just keep waiting for the next thing to be determined.
Yeah.
I need to get on with my life. And I certainly get the feeling, and I know that some of my colleagues that I speak to when I'm out and about, that there is more activity. And I think that we probably have hit the lowest of the market. I don't think that if you wait another 3 to 6 months, you're going to see bargains that we're unaware of now. I think that we're at ground zero.
There's a lot of people in the market who realise that a mortgage rate cut is not, a large significant cut in mortgage rates isn't around the corner. So I think there is a bit of that. People are just think, well, I'm going to go on with it anyway.
Yeah, no, I'd agree. And I think, we've certainly, if you look at our applicant numbers, particularly sort of those shopping at above 2 million, have been consistently up so far this year. It was probably busiest in the early part when we just saw rates, Best Buy rates dip below 4%. But actually, even over the last couple of months, we've seen pretty significant increases. So I think last couple of months, we're sort of 25 to 30% up in terms of applicants from where we were last year. Obviously, last year, not super busy, but we are starting to see those people in the market and looking. Similarly, if we look at listings, the number of properties on the market now is probably at near record recent highs in prime central London. But there's not a lot of distress. So actually people who want a bargain and are looking around and thinking there's quite a lot on the market are possibly likely to be disappointed. I mean, it definitely could be worth a try, but actually I think that, sellers and buyers are doing a similar thing in terms of they're gearing themselves up for a market that they're expecting to arrive relatively soon. But I agree with Tom. I think that, certainly, we fell foul of this early in 2024 when everyone came back after Christmas really optimistic, a little too optimistic about where things were going to end up. And I think we possibly shouldn't be too optimistic about what the indices are going to be saying towards the end of 2024. And it might be, the feeling might be that the market's a lot better, but that might not necessarily translate into figures, certainly until 2025.
I mean, on paper, it's in some ways, it hasn't been a better time to be a buyer over the last 5 years. If you look at the ratio of new buyers to new sales instructions coming on, it's pretty low at the moment. And so your competition as a buyer has probably not been as low as this in the last 3 or 4 years on paper. But as Marcus says, sellers are holding out. There's a bit of a there is a discrepancy between asking and what's realistic or what's achievable. So that's the sort of slight holding pattern that the market's in at the moment. It's a difficult one to try and describe because we are kind of waiting for something to happen. We're waiting for a new government. We're waiting for a rate cut. At the moment, everyone's kind of interpreting it a little bit in their own way. But, the market's at the moment, it's sort of in limbo a little bit.
So it goes back to the same old thing. If you hunt deep enough, you might be able to find that one guy who's just like, you know what, I've been in this market for 15 years. I've made X instead of Y. I'm going.
Yeah.
Potentially, although having said that, the rental market is still relatively strong. I mean, I think we have seen the rate of rental growth drop back, and arguably everyone's got used to either near double-digit or double-digit rental growth in the last couple of years. That is certainly not normal if we look back at long-term trends across the rental market. It's more like sort of 2% per annum in terms of annual increases, and we're still higher than that at the moment, depending on where you look. So actually, I think the challenge is that there is a market out there for rental properties. So actually, if you are struggling to sell, the likelihood is you flip that across onto the rental market. And if we are talking about that sort of people being slightly anxious about change and not knowing necessarily what the rules are going to be in a few months' time, that probably means they're more likely to rent for longer. So actually, it adds to demand for rental properties. So for landlords, whilst obviously they've got the challenge around tax and cost of debt, actually they're likely to have a tenant who's going to want to let their property.
Security in numbers, we're all in the same boat. I think you just keep calm and carry on, as they say. Thank you so much, guys, for coming to see us. And no doubt we'll be back talking to you after everything settles in the autumn and see where we're at.
Pleasure.
Brilliant. Thanks for having us.
Thanks very much.
Thanks for tuning in to our latest episode of the London Property Podcast. Head over to our website where you can browse our exclusive network of top experts driving the market. As a member, you'll have direct access to our experts and their networks. Our award-winning content will help you choose the right professionals for your needs and make informed decisions about your investments. Personal recommendations are a powerful tool in connecting with trusted professionals. Let us introduce you to the right people to help you achieve your real estate goals. Contact us now to learn more about becoming a member and gaining access to these valuable resources, or joining our directory of experts.